Let's just start about that massive change in the Fed's balance sheet and this world that we are going into, this new world with a balance sheet of that size. Have we fully realized the risks around that?
I think not. The benefits are evident at a glance at the Bloomberg terminal. Risk assets are on fire, and all is well on Wall Street. But the disparity between what's happening on Wall Street and what's happening on Main Street has perhaps never been wider.
Jim, let's talk about where this could take us, because there is a huge debate on programs like this and beyond about whether this is taking us into an inflationary environment or a disinflationary environment. As you see things evolving at the moment, Jim, where are we heading?
This is the vital question, and it is also a humbling one. I was a part of the unnecessarily concerned about inflation 10 years ago. I remain a part of the inflation camp, John. It seems to me that what is happening to raise the inflation rate higher is happening both in financial and in real terms. As far as the latter goes, productivity growth is certainly going to be crippled by what's happening in the economy. World trade is ditto, brought to a standstill. The international arbitrage of labor rates is probably yesterday's story rather than tomorrow's. As for the monetary side, over the past 3 months, the broader monetary aggregate M2 is rising at a 38% annual rate, 38. The Fed's balance sheet over the past 3 months has expanded at the annual rate of 362%. Now, these are typographical error-looking data. Not quite sure they'll be sustained, but certainly the monetary impulse is towards inflation, and the trends in the real economy, I think, also are inflationary.
Jim, can we just reflect on money supply? You mentioned that, and I've read it in your most recent copy as well. And I'm just wondering why money supply is relevant in an environment like this when people are starting to think about the inflationary outcome. 10 years ago, many people said the same thing. Why do you think this time could be somewhat different?
I think that the sheer magnitude of the Fed's intervention is a point to mark. Money supply growth is the fastest now it has been in any peacetime moment. What makes the money supply inflationary is not the inert stock of dollar bills. It's the rate at which they turn over, and it is the confidence that people have in the purchasing power of that currency. Inflation is, I think, finally almost as much a psychological issue as it is an arithmetic one. So, according to a Gallup poll, people have the highest confidence in the Fed chairman's abilities and judgment today, higher than they have had since the Greenspan era. But what the Fed is doing is so extraordinary, indeed unprecedented. What it is doing really is to federalize the financial markets. It's to override the price mechanism. It is to substitute its judgment for that of disinterested people conducting the business we call price discovery. These are very dangerous things, in my opinion, and they ought to give people pause about the nature of the currency that they deal with and that they hope to be repaid with if they are bondholders. John, what almost no one talks about in the context of these massive, almost unimaginable sums of money is the humblest creature in the financial system, namely the retail saver. The Fed has slashed its rates, of course, to nothing, and some say they ought to be less than nothing. Left out in the cold is the person who has a couple of $1,000s in the bank, perhaps someone of past retirement age. And here's a suggestion. I am not one for government intrusion into our lives, but I am here echoing something my friend Lee Minton has suggested. Why not set up a special savings program by which people of a certain specified age, say over 65, could get 2%, 3%, or, hey, it's an election year, how about 4% on their savings balances. There'd be a cap. You couldn't have more than, say, $100,000 in it. But the pillage of the thrifty in the context of these Fed interventions is a point that we ought to be thinking about. I think there's no moral justification for it, and certainly financially, the idea that thrift repays nothing is a very dubious proposition.